Good evening, esteemed colleagues. As always, it's Sunday, and this is the ForexTimes project with me, Ben Strelkov. Let's start immediately with a global view of euro-dollar. What we see here is nothing more than a pulse movement, after which 2T started a corrective one in the likely wave ABCD. There is a high probability that a triangle is formed. If a triangle is formed, then we expect the exit from the triangle in an upward direction, since the entry was also in the triangle upwards. Hence, we remember the global thought. It's buy, and we move on to the 4-hour view. What I really don't like is that according to the Commodity Futures Trading Commission, we see a decrease in buyers by 30%. This tells us that the trend is upward. But there is a probability to see further corrective decline in the coming trading week. Why? First, most likely, we are currently finishing the corrective decline in the waves of ABC, in which waves A and C are impulses. In fact, here it is clearly visible in wave A 5-wave pattern. Colleagues, in fact, this could be 1, 2, 3, 4, 5, and as part of the corrective wave C, this could be wave A of 1, 2, 3, wave B, and a 5-wave structure in wave C. But the most important thing that we need to see here are the target markers. According to this trading instrument, our target markers are located at the top. Option contracts call amount to 2.11 billion. Here, call option contracts amount to 419 million, and here option contracts call amount to almost 500, even more than, I apologize, $500 million. Therefore, I have previously told you that there is a high probability of forming a triangle and exiting in the direction of purchases. At this moment, I assume that the price has already stopped in correction ABC. Why? First, you can see the formation of 2 pin bar in a row, one and the second. These two MBA were formed in the strongest support range. Specifically, here we have the level of market maker loss, the lower boundary of the market maker profit range, and most likely the market maker will already be protecting their range next week, trying to return the price to it. Secondly, here we also have the hedge PUD premium level. The hedge PUD premium level is the level at which futures contracts will most likely be opened with maximum volumes, since the hedge PUD level is the maximum open interest on put option contracts with the Chicago Mercantile Exchange. Therefore, dear colleagues, for the coming trading week, we consider only purchases. From the point of view of capital management, if our price goes down, it is most likely that it will not go in wave markup 1, 2, 3, 4, 5, because in classical wave markup, the 4th wave should by no means absorb the minimum of the 1st wave if it is a downward impulse. Therefore, the maximum you can see with is the formation of the start of the diagonal. I apologize. I mean, of course, the end diagonal triangle, the exit from which is in any case for purchase. Therefore, if you enter the market for purchase, set a stop loss below the local minimum and get a stop loss, for example, minus 1% of the balance of your trading account. Wait for the formation of the final diagonal triangle, and after the impulse and correction, again enter the market. You will return your percentage that has gone into the minus and earn much more. Therefore, dear colleagues, for the coming trading week, we consider exclusively purchases. Regarding gold, there are two possible scenarios here. First, let's look at the data from the Commodity Futures Trading Commission, CFTC, of the USA. We see a decrease in buyers by 1% and a decrease in the capitalization of the trading instrument by 1% to $338.061 billion. Therefore, there's a possibility, number one, continuation of the corrective decrease in wave C. The thing is that we see one wave, a second, and there's a possibility of a decrease in the wave. likely the decline is going to occur to the accumulation of, I beg your pardon, of course, the option contracts put amounting to 248 million at the level of 2250. If we see this decrease to the level of 2250, we can consider entering the market for purchase. This is option one. And option number two, the formation of a triangle. A triangle, as we know, is a corrective formation. Hence, wave A, wave B, wave C is formed, then wave D, then wave E, which can either be full and again a reversal to buy. What recommendations for the upcoming trading week? We sit, wait, watch. If a triangle is formed, we will see here 3 waves, then down, the formation of wave E, and by using a pending order, attention, a pending order by stop above wave D, we place a pending order for purchase. The stop loss can be placed below the minimum of wave A. If the postponed order for purchase doesn't work and the price runs down, then option 1 at the level of 2250, we come to level 2250, either formation of a pattern pin bar and enter the market, or we will see the formation of an impulse correction and decide to enter the market for purchase. That's the gold plan for the upcoming trading week. But, esteemed colleagues, both option 1 and option 2 imply the continuation of the growth of this trading instrument for the simple reason that you perfectly know recently our gold has been growing and growing like in impulsive movement. Consequently, impulsive movement, I think you know perfectly well, the impulse always ends with an impulse. That is, impulse, correction, impulse, correction, impulse. And if we have a global reversal, then we have an impulse in the opposite direction. Correction, impulse, correction, impulse, correction. Therefore, the movement should have ended with an upward impulse, where the last maximum is, and that's where it is. That's the maximum value. Let's count the waves that precede this maximum value. 1, 2, 3, 4, 5, 6, 7. Now we should see either 3 waves, 1, 2, 1, 2, 3, 4, 5, this 7 or 9, or we'll see the final diagonal triangle. Now I'll explain 3 waves, 1, 2, 3, 4, 5. This is a classic impulse movement. 5 waves, 1, 2, 3, 4, 5. We have 7. Why did I say 3? Because in principle, one of the waves can be prolonged. For example, the third wave, the first wave, the second, and then in the third wave, we have 1, 2, 3, 4, 5 here, 1, 2, 3, then 4, and then 5. In total, if we count 1, 2, 3, 4, 5, 6, 7, 8, 9, and we have 7, so what remains is to see the final diagonal triangle. But we know what the final diagonal triangle looks like, and its rules do not apply here. So, what are these 7 waves? And it's not difficult. 1, 2, 3, zigzag. The bundle is 2, 3, a double zigzag. And let's count. 1, 2, 3, 4, 5, 6, 7, 7 waves, a double zigzag, and a double zigzag is a correction. Dear colleagues, if we have a correction here, then the impulse correction cannot end. This means that this entire movement is most likely corrective. That is, the first wave is corrective and the second wave is also corrective. This develops a large wave C, or this is all a triangle, again in a large correction. As I have indicated, since both our first and second options are corrective, then this means that the trend continues. Well, here's hoping that this is clear in principle. Let's explain more elaborately. Globally, for this trading instrument, I expect a sharp decline. The starting diagonal triangle is there in wave A. Then we have the 1D3 plane, that is the B wave, and the corrective structure is just right. If we have the A wave and the B wave, then something is missing. Yes, dear colleagues, the C wave is missing. So globally, we only consider sales. What do we have for the upcoming trading week? The structure for the upcoming trading week is as follows. Firstly, it will touch the target levels. We have an accumulation of option contracts. Also, hedge options are here. It is a maximum open interest on put option contracts with which professionals hedge their futures purchases on the Chicago Merc. They are not only located down there, but professionals have also rewritten their expectations downwards. This is according to weekly option contracts. Let's look at the monthly option contracts. Oh my goodness, can't be true. Please look. At the same level with the DEM option contracts, a large accumulation of put option contracts is located. Therefore, for the upcoming trading week, we are only considering sales. The structure is as follows. The first wave is indubitably present. The second wave for us is in the form of ABC plane. Then we have the third wave. At this point, we need to find out whether the fourth wave has already ended and the price is now plummeting down to wave number 5. Unfortunately, it's quite problematic to catch this movement. The market might make us a present and we will see the formation of a triangle. ABC, I beg your pardon, all is correct. Yes, ABC, then we start from here, A, B, C, D, E. Now, we will see the formation of wave E, after which it will be possible to set a pending order under the local minimum to set CELST order. So, the potential of the movement in principle will be 110, 120 points, but you will also have a stop loss, dear colleagues, approximately 110, 120 points. Therefore, if someone trades with a stop loss to trade profit ratio, it is preferably to sit and wait for the formation of the impulse and then see how we will enter. I'm sorry here, of course, you need to go a little lower since our accumulation of option contracts is located below. This is our target range. Then wait for the corrective movement and you can sell. This is a very promising trading instrument for the upcoming, I think, year. If I am right, then for a whole year, this trading instrument will strive to go downward for sale. Thank you very much, dear colleagues. I hope you liked today's lecture. Join Forex Times. You won't regret it. Goodbye for now.